All right, what's going on, guys? Today is Thursday, May 9th, and it is 8:07. It's about 23 minutes until the equities open, the stock exchange open. So what I'm going to do is take a look at ES, right? So the S&P 500 index futures, and we have a level here, 5,218 up here. And although it's pretty late in the price leg, the current price leg, this to me is easily where the market is going to trade to. If we zoom out, right, we do have a lot of stuff that I was looking at earlier this week and explaining yesterday on the live session. But the most important thing here is, where does that level come from? 52.18. Where does that come from? That's all of these highs up here. And so I will be looking for that in just a minute. All right, so as I was saying a few minutes ago, 52.18, that should be the target for the upside. Probably more like 52.20 and higher. The 20 level, at least, I would like if I was going to take a long position, what would the exit be on the upside? It would be 52.20 for me. To just stop at 52.18, that wouldn't make sense to me. So the open is going to be here in about 15 minutes. So what would I expect from here? Well, here's this. We have a small time frame set of lows down here. Now this is near the lower end of the current range that was created during London here. And there's some lows over here that were taken as well. So to me, I don't see these lows being taken before this level up here. I feel like if the market wants to run stops first, which it usually will do that before a significant move, and it has done that already. We have lows here, we have a low here at 7:15, and then we have two short-term lows here at 7:45, 8 a.m. So if it were me, I would probably expect a run below these two lows before trading higher and not go to these lows or this low down here. So because the open is in like 14 minutes and this is a very late swing from where current price is, 52.15. The upside is only 3 points, maybe 5 points away, and we haven't seen any deep retracement. So I would be a little bit worried trying to long something right here. If I was up and had traded this imbalance here, I'd probably feel okay about it, but I would not be surprised if this was a break even, as meaning, like, hypothetically, if I longed this imbalance and then we got a rally here, it is a new short-term high, but I just wouldn't feel very good about it, just because, again, we've seen higher pricing towards a higher time frame target, but we have not seen any run on trailing stops. And so, like, that's what makes me believe that these two lows here are probably going to get taken out before trading higher up to 52.20. Okay, so again, I want to leave this up for a few minutes. I have the clock up here so you guys can watch it, and then we'll see what happens. All right, so here we are at the equities open. So we should see some volatility here. I'm going to stick with the idea that we should trade higher, but I, again, would still like to see a run lower first to try and shake anyone out who has been long, especially the London traders. So they, the market should come down and probably knock them out, and that's why I mentioned trailing stops, a run on trailing stops. So I would want to see that before going higher. The only thing that would negate, let's say, longing below this low is those equal lows down here. Okay, not to sound too confusing, I would want to run on this, but leave these lows open, run those highs, and then probably see what happens after that. So again, I'll leave this up here and let you guys watch it and see what takes place, unfold, whatever. But just for sake of clarity, I would want to see a run below this low and then rally to the 5220s and something to that effect. All right, so we traded lower, and I'm watching the reaction here to see what we do at these lows, to see if this is going to be a stop run or excuse me, or if this is the move to trade lower, meaning like we have this formation here where this might end up becoming a mitigation to go lower, because remember, the equal lows are down there, down here. So if this isn't going to be a stop run to go higher, then I might be wrong in that assumption from when price was up here, expecting that. So if I'm wrong to assume that, then if price is just going to break down to go lower, then any retracement we might see should just be a short-term rally to fade to go below here. So, and I know that seems kind of tricky. Well, hold on, John. You were just saying you wanted higher pricing. Well, I do. I still want 5220, but if it's not a stop run, we might trade down here. So now this is starting to look like a stop run on the 5-minute time frame. I think this candle is going to determine probably what it wants to do. I would probably consider this a little bit lower probability because we're, price where it's at is in between two levels of liquidity. But 5218 is a higher level of liquidity, and 5200 is a lower time frame level of liquidity. So if I had to decide, like if you were to force me to trade, like press the buttons, I would elect to trade long versus short. So this candle will close in about 22 seconds or so. So we'll allow it to do that, and then we'll determine what it wants to do. But so, like, let's say let me just do this then. Let's say I had to decide, okay, I'll long this. I won't have a stop here because I'm not going to have a stop at lows. I would probably have to extend that to down here, which a lot of people would probably not agree with, and then a run for 52.20. So that barely creates a 1-to-1 RR. So if you believe that this is a stop run, then your stop would have to be tighter. Like, I'm not saying it would have to go here. I think that would be a little ridiculous. That's not impossible. I just think it'd be a little bit ridiculous. And again, I don't want to extend it to this low because it's, you have these lows here. I definitely wouldn't want it at the equal lows. I would probably place it down here to absorb a potential run down here, but I wouldn't want to see it trade below this low. And so again, that is what my idea would look like if we were to long this at this moment. Okay. So I'm going to take this off, and then I will let you watch the chart for a little bit. All right. So you can see that we have reacted from a run on these lows. We left the equal lows open, and now I think it has the green light to now rally to the 52.20 level and maybe even higher than that. So as mentioned, well, a little bit earlier, if we throw up the risk reward tool back on there, that's what that would look like. So, you know, again, we talked about various stop loss placements like that. You know, it could have been very tight like that. That'd be a 1-to-5. And I said that would probably be just a little bit absurd for most traders who are that close to the market. You might get, you know, stopped out before the real move. And then of course, said I didn't want to put it at equal lows, so I would have put it down here. So in either way, an entry below those lows would have done you some justice, done fairly well. And of course, now we should see the expansion. So we came off of that. I was watching to see what we would do here, and we ripped through that. And now this candle, right, is launching us higher. So, you know, this is what, I don't even know how to say this without sounding arrogant or egotistical, but you know, this is how you find high probability trades, how to know when to long under lows, right? Buying below previous lows. How do you know when to do that? I just walked you through it, right? From up here, we talked about a potential run on these lows. We got that, and now we're rallying. So the move isn't over. Obviously, like we're not done yet, but you know, I'm trying to explain it to you in the best way that I can and giving you my thoughts on, well, how to, you know, predict price. A lot of people say that you should react and not predict, and I think that's garbage. You just watch me predict. Okay, so you know, those people on Twitter who are like, yeah, you know, react, don't predict. That's wrong. It's opposite. You can predict price. All right. It's just those people, unfortunately, don't know how to do it. And again, not to sound like an a-hole, but that's why they say those things, because that's what they believe. And if they believe that they shouldn't predict price, it means they can't. There's 52.18. 52.19 and 3/4. So not quite 52.20 just yet. But did you see how it gravitated there? It kind of like, it was almost like a magnet. It did that really fast. It just, you know, took a couple of seconds for the market to do that. And that to me is, you know, it's reaching into liquidity. And that's the type of trades that you want. Be able to get in, have very little drawdown, and have the market go your way with nice candles in your direction. Like, for example, had we taken a long, we would want to see higher pricing. And at the moment, we have 4 up candles in a row, right? That's the type of trades that you want, right? So that's what that looks like. All right. So with that, I don't want to make this video too long. I'll have to obviously speed it up in between. So this video probably won't be super, super long, but that's what that looks like. All right. There's your 52.20, 21, 21.5. So there's your 52.20s, my friend. Right. So why would it stop at 52.18 when it could reach higher for that? So again, that 52.20 level called in advance, stalking price before the stop runs, outlining all of that in advance. Yes, it can be done. All right. I'm not always right, but when I see something high probability, this is how you do it. Okay. And so if we just zoom out again to see the bigger picture, these highs up here, right? High, slightly lower high, slightly lower high. That sets up low resistant highs. We got our retracement here for the stop run, price leg, and then the manipulation before the run. All right. So hopefully you guys learned something in this video. Drop a like if you guys were able to learn something. Leave me a comment. Let me know what you think, and I will see you in the next video.